Morning, guys. I'm just going to give a few seconds for everyone to enter the room. Good morning. Good morning. Okay, fantastic. Look, a very warm welcome to, let me just check. I'm sharing the screen. Okay, right, okay. Right, so a very warm welcome. It's awesome to see some regulars here today. So for those of you who don't know, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. So look, from me and the FP Markets team, thank you all for taking the time out of your day or evening or afternoon to be with us. Now, this is a presentation on the wonderful world of Fibonacci. Now, I see a lot of confusion among newer traders regarding the correct application of Fib levels. So hopefully today I can help clear some of this confusion. Look, I am hoping I am coming across loud and clear, and the welcome slide is visible. As usual, any technical issues during the presentation, please let me know, and the support team will try and get things up and running for you. As for a recording, a recording of this webinar will be available through the FP Markets website. You can find that under resources and on our YouTube channel. Also, please feel free to check out FPM's Trading Hub. It's full of free educational content and daily analysis from myself and other analysts, and using both fundamental and technical analysis. Right, as usual, guys, please do bear with me. I'm just going to quickly run through this disclaimer. I'm not going to read the whole thing. So the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information at the date of publication. As usual, what this is here for is simply to highlight that this is an educational presentation and not investment advice. Right, so oh God, this text really gets to me, this text on PowerPoint. I apologize for the misalignment here. Anyway, so look, this is a quick about me for anyone that's unaware. For anyone that's new to the presentation. So as you can see, my name's Aaron Hill. I'm the technical analyst for FP Markets. I've been involved in the financial markets for more than 12 years now. I also completed the Chartered Market Technicians course, levels 1, 2, and 3. And on the basis of completing level 2, I was able to receive the CFTe qualification. I'm also currently a candidate for level 1 for the CFA program. Now, guys, if you're interested in the CFA program, do be aware it's a very, very intense program. It completely dwarfs anything I've done in the CMT arena. CFA really is it's a monster, if that makes sense. It's a monster of study. So if you're interested, please do fire across any questions on any of these courses, and I'll happily help you highlight some of the key concepts of the courses. Finally, for me, I am a price action trader. I focus on Fibonacci, which is of course, the highlight of the feature of this presentation. I also look at the relative strength index regularly, and also I focus on chart psychology. Right, as an introduction to this webinar, in terms of topics, so the first port of call will be looking at the introduction to Fibonacci. Now, guys, I know there's a truckload of information about this available on the internet, so I won't dive into too much regarding how the Fibonacci numbers are formed. What most of us here are here for anyway is the application of Fibonacci to charts, right? So that's the main focus. Following a brief following a brief introduction, I'll kick things over to Fibonacci retracements, extensions, projections, and expansions. I'll clearly demonstrate how they're applied to the charts. We'll then round things off with a Q&A. If I'm unable to answer all of the questions or you're unclear on anything today, please go ahead and email me and the research team at marketanalyst@fpmarkets.com, or alternatively, guys, you can use the support email, support@fpmarkets.com. And look, we'll get back to you as soon as we possibly can. Also, if you have any ideas, any subjects you wish us to cover in future presentations, send across your ideas and we'll look at creating something for you. Right, so just to be clear, the presentation assumes you have some understanding of chart structure and a basic knowledge of technical analysis. If not, please feel free to watch the previous webinars where me and the team cover this. On a final note, can I ask how many of us, irrespective of your experience or trading style, has used or are using fib levels in your trading, and how do you find them? Do bear in mind fib studies can be applied to all time frames and therefore are suitable for day traders right up to position traders, the longer term action. So look, guys, feel free to let me know in the chat box your experiences with Fibonacci studies. Right, so before looking at Fibonacci trading applications, I feel it's important. To understand how the Fibonacci values are derived. Now, this all started from with this chap, Leonardo, and yes, I'm not even going to try and pronounce his surname. So if it's okay, we'll just stick with Leonardo. So look, guys, Leonardo was an Italian mathematician who first introduced the Fibonacci sequence to the West, I believe, and I think this was in the 13th century. So the Fibonacci sequence represents a string of numbers that boast unique mathematical properties whereby ratios are formed. Now, these ratios are found in things like nature and things like biology, and also extends, thankfully, to the financial markets, which is what traders are interested in, as they often offer traders definable support and resistance levels to work with. Now, with the Fibonacci sequence. Now, the Fibonacci sequence is an arrangement of numbers where after 0 and 1, every number is the sum of the two previous numbers. While at first glance this may appear difficult, it's actually relatively straightforward. Okay, so look, 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, 5 plus 8 equals 13, and so on and so on. 89 plus 144 equals 233. This essentially continues to infinity. This is what I meant when every number is the sum of the two previous numbers. Fibonacci relationships. Now, in my humble opinion, a trader should understand this structure if you're serious about trading with Fibonacci levels. So we got a comment here from Roger. Fibs are a pretty decent indicator. How is the 261.8% extension so good at predicting future price peaks again and again? Roger, I have to admit, I don't use that Fibonacci extension. That's fantastic if you're finding use in it. I only use the 1.272% and the 1.618% levels. I haven't really investigated anything beyond that. So that's fantastic if that's working nicely for you. Right, so Fibonacci relationships. As I said, traders should understand this structure if you're serious about trading with Fib levels. There's also some interesting relationships between these numbers that form the basis of Fibonacci trading. While I am unable to go over each while I'm unable to go over each relationship in detail, I am going to make sure you have the basics. So kicking off with the calculate, let me just get my friendly calculator up. So kicking off with the calculation of Fibonacci retracement levels. Right, so by dividing a number in the Fibonacci sequence by the next higher number, the next highest number, it will equate to approximately 0.618. Look, if we divide 5 by 8, that will give us 0.625. Pretty close, right? What about dividing 55 by 89? 0.617, 0.618. That's essentially bang on, right? So we're so very close to it now. If you round it, it's 0.618. What about if we divide? If we divide 377 by 610? This will give us 0.618, bang on. Okay, so look, you see the larger the value in the Fibonacci sequence, the closer we will get to the 0.618 value. And as most Fibonacci traders will know, 61.8% forms the basis for the 61.8% Fibonacci retracement level. This is something we will show on the charts very shortly. So what about the 38.2% Fibonacci retracement? Now, these two, 61.8% and 38.2%, are key levels, are key retracement levels most find interesting. How are these numbers formed? Well, we simply divide a number by within the sequence by the next two higher numbers to provide an approximate value of 0.382. So 34 divided by 89 gives us 0.382. Perfect. So let's go with another one. 233 divided by 610. Again, 0.381. Look, rounded, that's 0.382, which is very, very close. Moving on to another Fibonacci retracement level. This is not one I actually use myself, but the 23.6% is a very shallow Fibonacci retracement. As again, this is not one I use myself, but this is found by dividing a number in the sequence by the next three highest numbers. So as an example, let's go with 21 divided by 89. Okay, 0.235. Okay, relatively close. But look, I won't demonstrate more of this. I think you get the gist of what I'm trying to show regarding the Fib retracements. Now, look, in terms of the 78.6% ratio and the 88.6% Fibonacci ratios, these are simply the square roots. Right, so 78.6 is the square root of 61.8. So 61.8, hit the square root button, we get 7.86. Quite simple. For the 88.6% ratio, it's simply the square root of 78.6. So 78.6, hit the square root, and we get 8.886. Okay, so that is as simple as it gets with and just be aware, the 78.6% ratio and the 88.6% ratio are deep, deep Fibonacci levels. Also, I think it's important to point out that that while not officially a Fibonacci ratio, 50% is commonly used as a retracement ratio. You'll even find it on all Fibonacci retracement tools. Just be aware that this is not a Fibonacci retracement, Fibonacci value. But it does have use. I do use it. I do use this within my trading, and I find that it does help bolster additional technical concepts. Now, 1.618 is known as the golden ratio, golden mean, or phi. So what this is the inverse of 0.618, as both numbers are found, as I've said, throughout nature and biology. Therefore, they are deemed important levels for traders. Let's get my trusty calculator back up. So, as for Fibonacci extensions, if you divide a number by the previous number in the Fibonacci sequence, it will give you approximately 1.618. The 1.618% is a critical level in Fibonacci extensions. So look, by dividing 80, let me just get my calculator, 89 by 55, 1.618. Okay, so, and look, by dividing, let's say 8 by 5, we get 1.6. It's pretty close. It's nearly there. Look, we can go even higher. 610 divided by 377, 1.618. Okay. Another popular Fibonacci extension, of course, is the 1.272% ratio. All this is, guys, is the square root of 1.618. So 1.618, hit the square root, 1.272. Look, apologies if I've confused newer traders here. Please feel free to watch the recording a couple of times, as it's always good to know how these ratios are derived. Right, moving on. Trend structure. So let me get my pen. Right, so trend structure. For those newer traders here, I'll just quickly run over what a trend is. So we're all on the same page when we begin looking at the Fibonacci retracements and things like that. So a trend is what traders and investors, they pursue to make profits, especially for trend followers, right? So without a trend, unless you're an incredibly skilled range trader, it can be difficult to make money. I'm sure most of us have heard of the old adage, the trend is your friend, and it really is true. If you manage to time the trend correctly and have the patience and, of course, risk management to ride out the pullbacks or retracements. If being, a key word there, if you manage to time the trend correctly. So an uptrend consists of consecutive higher lows at this point here, and also consecutive higher highs. Excuse the drawing, guys. This is done with a mouse, but it's just to get the general idea of what a trend is. It's pretty simple. It's pretty simple structure. Consecutive higher lows, as well alongside consecutive higher highs. Okay, nothing more to it really. This is all it is a trend, an upward trend. Yeah, and it's relatively simple. So let me just erase the drawings here. Right, so next up is obviously a downtrend. So we draw on the screen again, a downtrend. Okay, and what this consists of is lower highs at these points here, followed by lower lows. Okay, so this is the basic structure of a trend. Okay, so again, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. You will find that some traders do refer to these as swing highs and lows, which is absolutely fine. It's just I'm trying to give you more of a textbook definition before we move on. I hope you are getting the gist of what I'm trying to demonstrate here, which is essentially to look for the clear swing points. Okay, look for the clear swing points. Let's not focus too much on what's going on in here or here. In Dow theory, these are called the minor trends, I believe. The minor trends. So we're not focusing on any of the minor fluctuations within these things, within the legs. We're focusing on the major swing points. Okay. Just clear all the drawings and move forward. Okay, let me just check the chat box. Okay, I'm just checking the comments. Okay, nothing there. Brilliant. Right, so as we can hopefully see from my clear-cut artwork done on PowerPoint, we are looking at Fibonacci retracements, extensions, projections, expansions, and Fibonacci clusters. Now, hopefully, I will have the time to go over what Fibonacci clusters are, as these are very, very important in my opinion. So just really quickly, as for fib clusters, I'm trying to figure out the right way of putting this across without overwhelming the newer traders here. Look, it is commonly known, so using Fibonacci clusters as one of the best ways to increase your chances of success with Fibonacci ratios. And it's essentially technical confluence. The logic being that the more pieces of evidence we gather at an area, the better the odds of a favorable outcome. So Fibonacci clusters are a type of confluence as it involves multiple Fibonacci ratios aligning to provide high probability support and resistance. So let me just take you through this. So right, we'll begin with let me just get my pen. Okay, we'll start with Fibonacci retracements. And this is this diagram, this is this drawing here, okay? So Fibonacci retracements, they have, they begin with so imagine we're in an uptrend. This is a higher low, higher high. So we begin from the higher low, okay? We begin with our Fibonacci retracement tool at this point. We extend to this point here, X to A. So it's 2 points we need. So we need a higher low and a higher high. So once you've extended from X to A, what will happen then on the Fibonacci retracement tool is you'll see retracement ratios extend to the right of your screen. So this could be the 38.2, 38.2. This could be the 50%. Again, guys, not a Fibonacci ratio. And then we have the 61.8% here. Excuse my handwriting. Then we have obviously the 78.6 here and the 88.6 down here. So all this is it requires 2 points, okay? And what this does is allows you to define support and resistance, obviously within a downtrend, support within an uptrend that's defined by Fibonacci levels. So as you can see here, we've extended our Fibonacci retracement tool from from point X to point A, and we are now testing the 38.2% Fibonacci retracement ratio, which could, of course, see a rebound form. Fibonacci retracements are the most basic for many of us to understand, and I'm pretty sure most of us here do understand the logic behind the Fibonacci retracement tool. You know, as its name implies, it's designed to highlight retracement points. All right. Okay, the next one, Fibonacci extensions. A lot of traders get caught out with this, okay? And I'm talking about textbook definitions here, okay? A lot of traders really confuse this with projections, okay? So a Fibonacci extension is not in line with the overall trend. So what happens is a Fibonacci extension is this diagram here. Now, if you look at all the good textbooks, this is what it will show. So again, using the Fibonacci retracement tool from point X to point A. Now, imagine we're in an uptrend here, okay? So this is a higher high here and a higher low there. We've set our Fibonacci retracement tool from point X to point A, as we did here. And our Fibonacci levels come across here. And what happens is price, submerges our Fibonacci levels and engulfs the X point here, which is 100% of this retracement. So it's 100% of all of this retracement here. So we're now in negative territory in terms of this swing, right? In terms of the X point to the A point. So the Fibonacci extension would be 1.272%. And then we have the 1.618% down here. Okay, so this would be another level at this point here. Now, these are very, very good in harmonic formations. So for harmonic formations, I'm talking about the AB equals CD patterns and things like that. But all this is, all the extension tool is an extension of the Fibonacci retracement tool. It's not an extension in line with the trend. It's actually it's actually beyond the swing within the trend. Okay, so you're looking for areas. So these can be very, very good to catch traders out, right? So we have the 1.272% here. We know traders are going to be looking to buy this retracement, right? They're going to be entering long, entering long, entering long, and all of a sudden price breaks this low here. Now, what's below these? What's below this high low here? Stops. We know that, right? We know there are sell stops below there. People that have bought here generally place their stops below the X point. This is looking at chart psychology. So we know that there are longs in this market, and we know the majority of people, I don't like to call them uninformed traders, but that's what a lot of textbooks say. Uninformed traders have placed their stops below here. Now that this opens up a perfect long opportunity. So it forms almost like a bear trap. So it's trapping the bears here, because not only are there stops below here, which are sell orders, right? Sell stops. There are also breakout sellers coming in, thinking that the trend has changed by breaking this point X, the higher low. So we have all this sell stop momentum coming in, and the larger players know this, and they need this to fill their bids. So they can use the 1.272% Fibonacci extension to buy into all of that sell stop flow. I hope that's relatively clear, guys. Any questions? Look, do fire away. This is the perfect time to ask me, as I can show you on the diagrams. Okay, moving on to Fibonacci projections. Now, Fibonacci projections is a three-point structure, structure. Okay, so let me just point to that. The three-point structure, which consists of point A, point B, and point C. Again, imagine we're in an uptrend, higher high, higher low. This is the same for a downtrend, guys, nothing different. So higher high, higher low, excellent. We've had our dip, we've had our retracement at this point here. And, oh, sorry, let me just go from these points here. So we've had our retracement at point B, and we've seen price is starting to rally from here. So we know we've got a potential higher low forming at this point here. Now, what we want to do is project a potential resistance, a potential take profit target. So what we do is we get our Fibonacci tool. We start from point X. We extend our Fibonacci tool to point A, and then we bring it down to point B, the higher low. What this does then is this projects, this allows us to, so we have the 100% Fib projection. Then we have the 1.272 somewhere up here. This will become clearer once we hit the charts, guys. I just wanted to give you a brief overview of what we'll be looking at. So 61.8 at this point here. Okay, so what we've done is we've projected possible support or resistance in this case, or potential take profit objectives, right? If we're entering long at point B on the dip, on the retracement here from A to B, we want some targets, right? So if we what some traders even do is they look for price to break above here before setting up their Fibonacci extensions, right? Makes sense, yeah? So if we break point A, we know the trend is likely to continue, okay? So with that being said, we can then apply our Fibonacci extension tool, which then gives us some levels to target. These are particularly good in strongly trending markets where we can look for partial take profit targets and things like that. Finally, we have what's known as the Fibonacci expansions. Now, I see a lot of confusion between these three here. So a Fibonacci expansion is, let's ignore this. Let's erase all of this. This has no meaning. So imagine we're in a parabolic move. Look at the dollar yen right now, right? The dollar yen on the weekly time frame. Imagine this is the dollar yen again in an uptrend. And prices rallied from point X to point A. Okay. We want to know possible how we want to forecast possible support and resistance, right? Resistance in this case. So what we do with the Fibonacci expansion tool, which is essentially the extension tool, just used a little differently, is we start from point X. We draw this point to we draw the indicator to point B, and then we draw it back to point X. So there are only 2 points of contact, but you draw it. So the first move is to point A, then draw it back to point X. And this will give you your expansion levels. Okay, so without the need to include any of this. Okay, so it erases the need to have a retracement form. Fibonacci clusters. Now, Fibonacci clusters, I think it's best I leave this till we go to the charts because I have quite a few examples to show you on that. Let me just get rid of this. Guys, are there any questions on what I've thrown at you so far? If so, ask me now and I'll happily clear this up on the diagrams. And it's blank. Okay, excellent. So you've all understood. That's fantastic. Oh, we do have a question. Bear with me. The reason there's confusion between fib extension is on the chart, but yes, I agree, Peter. Yeah. So the reason there's confusion between fib extension and projection is on charting packages. They are called trend-based fib extension. I totally get that. Yeah, on Fibonacci, on the trading view as well. I totally agree. But hopefully by the end of this, you will know that these are the correct textbook ways of using these Fibonacci tools. You will find a lot on forums as well incorrectly label these Fibonacci yeah, so look, let me just go to the charts. That would be easier for me to explain. Just bear with me. And let me just see what the next slide. Yep, chart studies. Just bear with me, guys. I'm just going to switch things over to the charts. Okay, first up is the euro dollar. Guys, can you just type in the chat box Y or N if you can see my charts? That would avoid me talking to myself. Fantastic. Thanks, Mark. Excellent. Right. So first up, we have the euro dollar H1 chart. Now, this is something I highlighted in my daily market analysis. Let me just zoom in. A very, very basic example. There was also the possibility of a double bottom, but it doesn't look like that's going to come off. So let's get rid of this for now. Right. So thanks, guys. Thank you for letting me know. Right. So remember the Fibonacci retracement tool. Yeah. So we start from point X. We go to point A. Point X to point A. All right. So with this initial one, from point X to point A, we have a 50% level. All right. Again, guys, this is not a Fibonacci value, but it is something I do look at, and it is something other traders look at. Hence, it's almost a self-fulfilling, it's almost self-fulfilling, as is all the Fibonacci ratios, if you think about it, right? So we have a 50% retracement ratio at 0.973, and we also have a 78.6%. You probably can't see it, but I've drawn it from point X to point A. Now, what I really liked about this Fibonacci, so this is a Fibonacci cluster. As you can see, it's clustered together. All right, the retracements are clustered together. Of course, I would prefer to have more Fibonacci retracement ratios cluster in this area. And to be honest, this is probably not the best definition of a Fibonacci cluster because we have obviously the 50% ratio there. But look, this is the general idea. Look how tight the Fibonacci levels are, but look at the position of the Fibonacci ratios. There is very little to the left of price telling us that this could be a support. This is what I really like about Fibonacci ratios, is its positioning. Now, also look, it's below the key 110 figure on the H1 time frame of the euro dollar. Now, the 110, as most of us are aware, will be widely watched in the FX space. Now, with that being said, we know we have Fibonacci support at 0.972. Although I would prefer the Fibonacci ratios to be around 20 pips below the round number, what this does is it provides you a floor to work with to take part in a whipsaw, a potential whipsaw. So price has whipsawed. Price whipsawed through this round number, took out a truckload of traders. Not only did it take out any traders that were attempting to fade this level, to buy from this level, what it did was it also tripped sell stops from breakout sellers. And even more on the retest here, right? traditional theory says if price retests the level and holds, there's a greater chance of continuation. But what happened here? We actually retested the level and added more sellers into the space. And what happened is price bounced nicely from this almost hidden cluster. Okay, so it's a nice area. If you understand chart psychology a little bit, you can apply Fibonacci ratios at points of pain, if you will. So this was a point of pain, right? This was a point of a point of pain for those not only attempting to fade this round number. Look, we had a higher high, right? We are in an uptrend, an immediate uptrend on the H1 time frame. We had a higher high. Traders are going to be looking at buying. Let's go long at the round number. What happens is the pain begins, okay? Both from those traders attempting to fade the round number and, of course, those attempting to sell the breakout below this number. So by price bouncing up here, it caused the ultimate confusion, right? So there's a lot of pain at this point here. Okay, let me just check the chat box. Nothing there. Excellent. Right, onto the Aussie dollar. Right, so this is one I'm going to draw on the chart so you can actually see the application. So first up, we have the Aussie dollar has been doing very, very well, by the way, very well technically. So let's just start with the Fibonacci retracements. Let's go. I think it was a 618. Okay, let's start with the Fibonacci retracement ratio from extreme points. Okay, the extreme X down to the extreme A. Okay, and we have a 61.8% Fibonacci retracement at around 76.09. Now, I did look at this point as well, but there was nothing really that come up. Look, we have the 61.8% at that 75.44, and we also had a 78.6% around this area up here. Just didn't really connect with this because what I'm looking for is Fibonacci confluence that converges with the pattern profit objective from this double bottom. Okay, as you can see, the pattern neckline was taken in early March, and we are now above the 200-day SMA, and we're also above trend line resistance. Now, what this does is really gives me a good indication we may be heading higher to complete this double bottom pattern by hitting the profit objective. Now, if we can find Fibonacci confluence around this area, this gives me greater confidence in a possible resistance area above here. On another note, do look at this lower high at this point. There will be traders, there will be sellers still trying to come in from this pullback here. There will be sellers coming in here, sellers coming in there, and where will their stops be? A lot of stops will be above here, okay, or above this high. All right, so there will be buy stops above these levels. Now, if we can find Fibonacci confluence around this area, we're pretty good to go. There's a very high probability we could see a reaction form. So we're looking to build a case. We're looking to build a Fibonacci case around this area. So let's look at the Fibonacci projection. Remember the Fibonacci projection, 3 points. We start at point X, we head to point A, and we head to point B. Remember, I've waited for price to break above the higher high before setting the Fibonacci projection. All right, let me get the 100% on. And we have a nice confluence with the 100% projection. Now, for anyone that follows harmonic structure, this is an AB equals CD. Okay, so it's a very basic. So it's A to B, C to D, equal legs. Okay, so A and B, C and D, they're equal legs. And this is represented by the 100% Fibonacci projection. Do we have anything else? So from what I found, we also have a 1.618 Fibonacci extension. Now, again, extension, what is that? An extension is an extension of the Fibonacci retracement. So imagine we are looking here. We are looking point X, point A. This is the retracement, guys. We're looking at these levels here, the retracement. What's happened is we've breached 100% of this this retracement leg here. This here, okay? So we've reached 100% of this. What we can do now is look for Fibonacci extensions. Now, if my memory serves me correct, there was a nice 1.618% Fibonacci extension converging with the 61.8% at 76.9. Now, look, what we have now is reasonably decent Fibonacci confluence, okay? And it's very tight as well for a daily time frame. Look, we're looking, what are we looking at? 74, 76, 40, looking at around 30 pips. It's a very tight region. In addition to the pattern profit objective at 76.60. The pattern profit objective, of course, comes from the double bottom. So this is somewhere I will be looking, I will be watching, should we continue higher. Okay, so as you can see, you can blend your technical concepts together with Fibonacci studies. Okay, moving on to the pound. Let me just see. Yes, no problem, Sandesh. I hope I pronounced your name correctly. Apologies if I didn't. So could you please send a PDF document? So the PDF for these slides. The slides are pretty bare, but I can send them, no problem. I'll provide my email at the end of the session, and just send me an email to remind me if possible, and I'll happily send over the slides. No worries. So on the... we're now on the pound dollar. This is the H1 time frame. As you can see, guys, look, we have breached trendline support taken from the 130 region, and we also breached 132 to the downside. So respecting 132 to the downside and breaching trendline support, we are likely heading for a, around this area here. Okay, so I'm looking at this area here, which is around the 131-ish region. But we also, if I zoom in closely, we have a Fibonacci retracement. Now, this is what I like to call a modest Fibonacci cluster. Again, made up of a 61.8% Fibonacci retracement and an 88.6% Fibonacci retracement. Remember, the 88.6% is simply the square root of 78.6. I think that's the correct term. Let me just see to avoid giving you incorrect information. 78.6, yes. Okay, so how did I get these levels? Quite simply, from point X at this point to point A. And I look for another swing, clear swing low, swing low, higher low. At this point here, point X to point A. Okay, so you can join all of these at the top to try and find a possible area of confluence. Now, the great thing about this is, look what this level, look where this level is positioned. It's positioned below these lows here. Now, again, guys, this is a clear higher. This is a clear high and a clear low. There will be traders looking to buy into this still, because we are technically still in an uptrend on the H1 scale. So what happens is price may slam through these lows and connect with our Fibonacci retracement ratio. Now, this isn't as good as the previous one on the euro, which was positioned below the round number, but it is something to be aware of. I don't really like that it's so close to the 131 region, but I would be looking at, so between these two areas, I would be looking at a possible bounce forming from here if we do indeed continue lower. Okay, finally, on to Bitcoin. Now, this is a really, really nice example. Now, I'm sure most of us are following the Bitcoin charts, but this is really a Fibonacci trader's dream at the moment. Let me just try to, this looks a bit of a mess, I do understand. Let me just, this should become clearer though soon. So within here, let me just highlight these areas. So between the here, this is what I call a textbook Fibonacci cluster. Okay, look at the Fibonacci levels within it. It's almost, you know, a thing of beauty for me. Anyway, it is for me anyway. Look how many Fibonacci ratios converge at that point. Now, if you zoom out, you can see it clearly highlights an area, a darkened area that we need to pay attention to. What I also like about this area is it's positioned above this resistance area at 45,828, 43,972. So look, sellers coming in here, okay? Above here, there will be buy stops, and there will also be breakout buyers, all right, that will feed into these offers at this point here. So how did I devise this Fibonacci cluster? So, and let me just try and zoom right in so we can all see. So as you can see, it's made up of how many? 4 Fibonacci ratios. Now I like to see 3 or more really to form a Fibonacci cluster. But as you can see, it's clustering within the area. So first up, we have a 1.272% Fibonacci projection. Now that's taken from this point, as you can see, point X to point A. Let me just see. I can just show you by moving it. So point X to point A. Look, we are looking for an extension beyond the retracement of this. All right. So this comes in at 47,656. We then have, very basically, a 78.6% retracement taken from this higher, lower high to this low at this point here, as you can see here. And this comes in around the 47,942 region. We then also have a Fibonacci projection. Again, guys, 100% Fibonacci projection at, let me just zoom right in for you, 48,163 at this point here. And how was this derived? From point X to point A to point B. Okay, let me just show you. There we go. That's it. So we start from this point here, extend to there, bring it back down to point B, and this gives us a 100% Fibonacci projection. Finally, we also have a 1.272% Fibonacci expansion. Let me just erase this and I'll redraw it for you so we can see this applied. So find our extension or expansion tool, both the same things. So we start from point X, you go to the point A. Remember, 2 points of contact is all you need for a Fibonacci expansion. So point X, point A. Drag it back to the X point, set up your 1.272%, and there we go, 48,381. So we have a nice area of Fibonacci confluence here, and this is something I will be looking at in the future should we break higher. There was also a 50% level that was taken from this swing high to this lower high to this low. There was also a 38.2% on the major retracement from this point X to point A. And these two levels come in around here. But look, guys, in terms of Fibonacci confluence, I would favor this level over these two any day of the week. Hence, because there's a lot more confluence around this area. Right. So, guys, look, this is all I have to show in terms of chart work. Let me just spin back to the slides. All right, Q&A, guys. Any questions? I see it's pretty blank. Either you've all fallen asleep or you all understand. We'll all leave very happy if we do. All right, there's no questions I see in the chat box right now. So I assume we're all good. If there's any questions, do fire away. And fantastic, Nick. Was it clear, Nick? Was everything clear with the different combinations? Roger, would you use fibs only as indicators or a combination of other items? So as you can see here, Roger, I've just moved the chart. So, sorry, guys. Let me just spin back to the chart. There we go. So as you can see on the chart, Roger, I do use, I'm a big fan of Fibonacci ratios, but I don't just apply them. I look at the chart structure. So for instance, I look, I really love Fibonacci ratios at points of pain. So points of pain being above a resistance area, above a clear resistance area. All right. So we know there's going to be a point of pain above here, right? So we know there are going to be buyers coming in here, breakout buyers getting excited because they think the trend's going to continue, only to be slammed from this area. The euro was a good example of that. The pain derived from this area was just clear and obvious to anyone that understands the chart psychology, especially around psychological levels. We have a reasonably clear cluster. I don't like to call it a Fibonacci cluster because it's not really. because it had the 50%, but we do have it placed below the Fibonacci retracement ratio at a point where not a lot of technicians will be looking. There's nothing there really. There's nothing there telling me that that this will be a support, because it's completely hidden by this aggressive lower shadow here at this point here. So yes, would you use fibs only as indicators or a combination of other items? 100%, always a combination of other items. If you have a Fibonacci, another example, of course, is if you have a Fibonacci cluster converging with a supply or demand, or a clear support and resistance level, that would add weight to your confluence. Now, there is something, just really quickly, this is my analysis on the this is my daily market analysis. Let me just go to the H4 timeframe, because this was picture perfect. I actually missed this one, which I cannot believe I missed. I was focused on down here, actually. I was focused on taking the sell stops below this trend line support here. This is the H4 on the Aussie dollar, but I missed it. What I missed was this picture perfect. It really was so good. And this is actually what one of my mentors, this is his bread and butter setup. All right, so look at this. And a clear cut AB equals CD formation into trend line support. Now the 100% Fibonacci projection at 71.73 just held. Look at the confluence there. It's just unbelievably good. Now I'm not sure if we had any Fibonacci retracement confluence at that point. I can have a look. We had some down there. If you see, this is the 61.8% at 71.50-ish. But there probably was other confluence, but I just completely missed it. I was so annoyed with that, because these are very, very high probability setups. But look, just to answer your question, Roger. Yes, I do look at other concepts in line with the Fibonacci studies. There is certainly something in Fibs with the golden mean and geometric mean of laws of nature, which I believe directly translate. It certainly does to fear and greed in the markets. I think it does, Roger. Yeah, I think it really does. Your AB equals CD stuff reminds me of Elliott wave. Yeah, I'm not really a fan of Elliott wave, to be honest. I briefly studied it in my CMT. I briefly studied it in the CMT, but I've never really applied it, to be honest. I prefer to keep things as simple as I possibly can, in terms of chart psychology, and where I can, highlight points of pain on the chart. Yeah, so that's what I really look for. So we have a comment from, yeah, that's fantastic, Roger. Excellent. So I'm not sure if that's your name, but that's what you've signed in as. Promise. Look, this is. I understand this can be a difficult concept to grasp, Fibonacci, but look, if it was easy, everyone would do it, right? So trading takes time to learn. It's not a one weekend thing. The successful people I know, and took years to understand this. It's not, if it was just simply a case of applying a couple of moving averages on a chart, right, we'd all be millionaires. It's not that case. It's not a case of that. And trading is so much more than just chart studies. It's psychology, it's risk management, it's money management. There's so many elements to it. But it's certainly worth the frustration, the years of frustration, I believe. Right, so just to wrap things up, guys. Look, any as you can see here, any comments or feedback to support@fpmarkets.com, or alternatively marketanalyst@fpmarkets.com. This will go directly to the research team. I will try to respond as quickly as I possibly can, but with work commitments at the moment, it can be difficult. Right, so in terms of April's webinars, look, we have MT4 crash course on the 7th of April, MT4 versus MT5 on the 14th of April. And then we also look at FX margin and leverage, and that's on the 21st of April. And then we go into trend lines, how traders use and apply trend lines on the 28th. Also, look, guys, we have an active Telegram channel. The sign up tab will be in the chat box, and also you can find this on the main website. It's a little link down at the lower left side. And look, so on that note, thank you all so much for taking the time out of your day. I really do hope you walked away from here a little bit more informed regarding Fibonacci. Do look at the recording. Any questions regarding the recording, do let me know, and I'll try and clear up any confusion. Yes, you're very welcome, guys. Thank you very much. So on that note, have a wonderful day or evening or afternoon, wherever you're watching from, and I'll catch you all again very, very soon. Thank you very much.